Welcome back to Beyond the Sale, empowering NAAR members beyond the transaction. I'm Michelle Linton, president of Northern Arizona Association of Realtors. Today, I am thrilled to be joined by Devonna McLaughlin, CEO of Housing Solutions of Northern Arizona. Devonna has been at the forefront of creating housing opportunities in our community, and she's here to share the details about that Community Homebuyer Assistance Program, or CHAP, a City of Flagstaff initiative that provides up to $50,000 in down payment assistance and closing costs for first-time homebuyers. This program is something every Northern Arizona Association of Realtors member should know about, and I want to dive in. Devonna, let's start with the basics so our realtors have the right foundation. For realtors who may not have heard of the CHAP program, can you give us a quick overview of what the program is and how it helps first-time home buyers in Flagstaff?
Sure. So the CHAP program is our Community Homebuyer Assistance Program. It's funded by the City of Flagstaff through the voter-approved housing bond, and it provides down payment and closing cost assistance to income-eligible first-time Flagstaff homebuyers.
So my understanding is that the voters of Flagstaff approve the housing bond to support housing affordability. Can you talk about where the CHAP money came from and why the community chose to invest in this type of homebuyer assistance program?
Yeah, so the housing bond that was approved by voters is a significant investment in affordable housing in our community. And it's super exciting to see this program come forward as part of that investment. So the CHAP program is the home ownership component of the bond, and it dedicates $7 million to be used for down payment or closing cost assistance for otherwise mortgage-ready buyers who just need help with the upfront cost of home ownership.
That's powerful. It really highlights how our community values homeownership and voting to make it possible for more Flagstaff families. Now that we know what CHAP is all about, let's talk about who it's designed for. How does HUD define a first-time home buyer? And what is the key eligibility requirements for realtors to keep in mind?
Yeah, so there's a couple of different components for CHAP. The first is that you have to be a first-time Flagstaff home buyer, and HUD defines that as not owning a home in the past 3 years. So we're looking at folks who would be first-time purchasing in Flagstaff and not owned a home in Flagstaff in the last 3 years, or the greater Flagstaff metropolitan area. You haven't lived or railed here owning a home in the last 3 years. In addition to that, there's some income eligibility criteria, because it's targeted towards workforce. So folks have to have no more than 150% of the area median income for their annual household income, and that includes income from all members of the household, regardless of if they're on the mortgage or not.
Okay.
Sometimes folks may or may not be on the mortgage if they don't benefit the loan. And so even if the lender's not counting someone's income towards loan qualification, but they're going to live in the house, we're going to count them as income for this program.
Okay, so there's adult children, for example.
Yeah, exactly.
Okay.
Yeah. And so then all of that combined household income can't exceed 150% to the area median income. And then that's scaled based on household size. So a household of 1 is a little bit less than a household of 3, for example. So I have a cheat sheet because I don't have these numbers memorized yet. But for a household of 3 in Flagstaff, they can't make more than $152,820 a year.
Okay.
So not low income. At 150-ish thousand for a household of 3, you'd qualify for the program, which is exciting because then we could be helping essential workers, folks, maybe 2-income household earners can still be under 150% AMI and be able to qualify for a mortgage that would be robust enough to compete in our market.
There is a requirement that at least one buyer must have lived and worked in the Flagstaff area for 12 months. How is that verified, and what should agents be aware of when counseling their client?
So we're going to look at employment, for example. So if you've worked for a company in the area for the last 12 months, that's an easy way of verifying that 12-month status. Where did you live for the last 12 months? So do you have tax returns that show your residency was in or near Flagstaff? Do you have a lease that shows that you've been there for at least 12 months? So if we can verify either one, whether you've worked here for at least a year or whether you've lived here for at least a year, then we're good with that 12-month residency requirement.
All right, so taxes and a lease, very helpful. Should we be reminding our clients that residency and work work history matter as much as income? So
I think we do, yeah. So it's going to be one or the other, right? And typically, we're similar to a lender in determining income eligibility. We collect a lot of documents. And so we're going to get it for the most part through that income verification process. So if you've worked for somebody for the last year, we're going to need pay stubs or a verification of employment anyway, just like her lender would. So we would verify that you've been there for a year and be able to verify your residency that way.
okay, great. So the remote workers with a lease of a year will qualify.
Yeah, as long as they've been living kind of here for the last year.
Okay. Can you walk us through the income limits? What's the range in 2025? And does it include all household income or just the borrowers?
Yeah, so for CHAP eligibility, the city's looking at folks that need assistance. And so it is one of the ways we determine that need is based on household income for all members of the household. So, and as long as that combined income is less than 150% of the area median income, the borrower would be income eligible for the program. And I do want to say those limits are based on HUD. So HUD comes out with income limits annually in the spring. So each year, those will adjust. So when HUD publishes that data, May-ish, it's never a given, then the city will recalculate their limits based on those published guidelines, and then we'll publish new guidelines in 2026, 2027 as they update.
Okay, that's a big takeaway. Agents really need to know its household income and not just the person on the loan application. So, for example, if somebody buys the house and then they have roommates, if they lease out a room, they will not qualify.
That's not true. No. So the household has to own or occupy the house.
Okay.
So they can't buy the house and move to Phoenix and rent it out because you're not loan or occupying it. But let's say you have an extra bedroom in your house. You could lease that out in the future. So if it's you and your buddy coming into this transaction together as a household, we're counting both. But if you have a hypothetical renter in the future that you don't know, like if you're buying a 3-bedroom, you only need a 2-bedroom. We don't know what you're doing with the 3rd bedroom down the road. Like you could have kids or whatever, right? So if in the future you're going to get a roommate, then that's absolutely fine. If you have one already coming into the transaction, we're going to look at them for household income.
Thank you for clarifying that.
Yeah.
All right, so let's get into the nuts and bolts, how the dollars actually work for our buyers. The flyer mentions CHAP provides up to $50,000 in down payment and closing cost assistance and a 10-to-1 match. Can you give a real-life example of how a buyer comes in with $5,000, how their funds will be matched?
Yeah, so that's typically what we see is that buyers work to maximize the amount of assistance they can get. So often the clients we see come in with $5,000 or more, right? Like they might eat more into the transaction, or they might be getting a gift from a family member to just make the numbers work. So there's no only 5,000, but often it is 5,000. And as long as we can document at least $5,000 coming in from the buyer, then they're eligible for the 50,000 in loan funds through CHAP. If you only come in with 2,000, we're only going to match up to $20,000 in that 2-to-1. So sometimes it happens, but I'll tell you, most of our borrowers are at that 5,000 to get the 50. That's good to know. It's the best investment you're going to get. So yeah, it makes sense to kind of save your nickels and dimes to get to 5,000.
That example makes it really clear. I can see how realtors can explain that to clients in simple terms. Yeah. Realtors often get asked if this grant is a forgivable loan. Can you explain the repayment terms and how the equity share formula works?
Yeah, absolutely. So this is not a grant. This is never forgiven. And I want to see that repeatedly, lots, really loudly, because everybody would love for it to be forgiven. I get that. But there really are some exciting benefits to the program where you don't have any payments on it. And so that doesn't impact affordability. Like who else can borrow $50,000 and not make payments on it? That's a really nice gift. But it is borrowing and it is a loan. So the assistance will be secured in second position behind your first mortgage. You'll sign a deed of trust and a promissory note, and you're going to pay it back. So let's say you're my borrower. So you're going to come in at the title company, you're going to sign all your loan docs. The money will come to the title company. Everyone's excited and happy. But it's a loan. So then it gets repaid if one of 3 things happens. You sell your house. Makes sense, right?
Right.
You decide that you don't want to live there anymore. So you move anywhere, doesn't matter. You don't sell your house, but you keep it as an investment property. You can do that, but you have to pay the assistance back. So the intent of the program is to create home ownership for owner occupants, not to create investment property. So you have to pay it back. And the third way is, let's say in the future you have equity, you want to do a refinance for cash out. So if you want to access your equity to do something with it, we don't care what it is. We don't judge. Go to Aruba, pay for your children's college education or your retirement, doesn't matter. But if you're taking cash out, you have to pay the city back first.
Okay.
So one of those three things happens, there's repayment. And repayment is not dollar for dollar. So how it works is based on shared appreciation. And I find the easiest way to explain it is with an example.
Okay.
I'm going to use very basic math because otherwise it's complicated. So let's say you buy a $100,000 house. I know those don't exist. Let's say you buy a $100,000 house and you get $10,000 of CHAP. So that's 10% of your original purchase price. When you sell your house after 10, 15 years, it's now worth $150,000. So it's appreciated $50,000. You're going to pay back 10% of that new sales price or the appraised value if you're not selling it, right? The value when you sell.
Right.
So in that scenario, you borrowed $10,000, but you're paying back $15,000, which is 10% of the new sales price. But you got $45,000 of appreciation. That's yours. You also get 100% of whatever buyer contribution you put, like if you had down payment, right? That's all yours. And anything you paid down on your first mortgage, all yours. So you're not sharing the equity, you're sharing the appreciation.
Okay.
And that's to help recapture some of that money back to help the next buyer. So one of the amazing things about CHAP is that there is an initial $7 million investment. That the voters or the taxpayers said, we care about people buying a house, putting down roots in our community. But it's not just those first people that benefit, because when you pay back your assistance, it goes back into the pool to help somebody in the future access home ownership in 5 or 10 or 15 years. So it is a recycling, replenishing loan pool that doesn't just give an investment today, but will continue to provide investment for buyers in the future in our community, which is so exciting.
So exciting.
Yeah.
So essentially they're investing in the community too, as they were invested.
Right. Yeah. And that same, like in that scenario, the $100,000 house is now $150,000. The next buyer might need more than $10,000 to buy and to get into homeownership. And we've seen CHAP over time increase, right? Like when I first started, won't say when, we were giving out $15,000, and that was enough to help workforce buy into our community. But now you see CHAP is up to $50,000. So the investment is greater, which is why that shared appreciation repayment model makes so much sense, because we need to have more money coming back in to help the next buyers, while still recognizing that the benefits of homeownership include appreciation benefits to the first buyer.
That is good to point out and so important. I know many buyers assume it's forgiven, and so it's good to be crystal clear on the repayment is part of the deal.
Yeah.
And back into the community as well.
Right.
How does CHAP interact with common loan products that we see here in Flagstaff, like FHA, VA, or conventional mortgage? And can it be layered with other assistance programs?
So the easy answer is yes and yes. So the nice thing about CHAP is that it will work with FHA financing. It will work with conventional financing. It will work with VA financing. You're buying in city limits. You have to buy in city limits. I should have said that earlier. City limits. So that doesn't qualify for USDA, but that's because USDA doesn't fund in city limits. So we work hard to work with local lenders and mortgage companies to make sure that they've approved CHAP to be used with their first mortgage products. So we have a lot of local lenders who already have it approved. And then if you come with your own lender, let's say your brother-in-law is a lender and he's going to give you your mortgage, you want to work with him, great. As long as they'll approve CHAP to be in second position behind their mortgage, which they should, most have, then he can provide financing through their mortgage lender company too. So yes, works with all of the typical loan products. The other nice thing about CHAP is that we can layer assistance with other assistance programs when they're available. So for example, there's the WISH program, which is the Workforce Initiative Subsidy for Homeownership. Everything's an acronym. That's funded through the Federal Home Loan Bank of San Francisco, and it's for low-income home buyers under 80% area median income. So when people come talk to us, we're always screening for everything we can for down payment assistance. So if someone comes in under 80% AMI, we're going to tell them CHAP's available if you buy in city limits, and WISH is available if you buy in Coconino County. So if you buy in Flagstaff, we can layer both programs, and you can receive up to $80,000 combined between the two programs. So as funds become available, like when the Arizona's home program was available from the state, we determined eligibility and layered assistance. There's some employer assisted housing programs. We're going to look at everything you could be qualified for and make sure that you know about it and determine your eligibility for all programs we're aware of.
That's encouraging. Realtors can reassure their clients that CHAP doesn't just box them into one loan product. So from a realtor's perspective, timing and process is everything. At what stage in the home buying process should our realtors encourage buyers to apply with you? And how much time should we build into the contract for CHAP approval of funds?
So I think it'd be great if folks come talk to us before entering into a contract. But when they start shopping with you guys, it would be great to know if they're eligible for the $50,000 because that impacts buying power. So I would say that upfront knowing that is going to help you guys find a home in the right price range, because you've probably got a pre-qual from a lender that gives you that buying power. And then if you can layer CHAP in as well, now you know what range you're shopping in. So if they've already come and talked to us beforehand, if we've already gotten eligibility determined before you go shopping, that would be ideal. Okay. Let's say all that's happened, they're shopping with y'all and you guys put an offer in to buy a house. We ask for a 45-day close. Or longer, but typically it's shorter. And so 45 days, because that gives us time to coordinate with the first mortgage lender to make sure we underwrite the first mortgage to make sure that it's affordable for the home buyer, looking at housing ratio, debt to income ratio requirements. We can't do that so we know the purchase price, right? The lender can't lock a rate or give you a loan amount and tell us what the payment's going to be until we know what the house is. So it takes a little bit of time for us to just work with the lender to then find final approval, right? Eligibility is different. You income qualified, you know you're going to look in the city of Flagstaff. But when you buy the house, now we're looking at the loan to make sure it's affordable to you. So that way, then we give you a final approval. And then it also gives us time to work with the city of Flagstaff. So we have to get information to them because they're going to send the money to the title company. And so they need a little bit of time to approve on their end and make sure that they can wire the funds. So 45 days is ideal. Less than 30 is probably a deal breaker.
All right. So a good reminder to our realtors, let's shoot for client food chat for 45 to 60 day close. We can get them in this product.
Yeah, that'd be great. And I recognize the market changes, right? Like, so sometimes length of time closing is a factor that the seller is going to look at. So you can try to be more attractive or less attractive. Hopefully 30 to 45 days is agreeable for your sellers.
Yeah. I mean, we can get them there.
Yeah.
Okay. So what documents or prep work should realtors make for their clients that are ready upfront to avoid any last minute delays?
So I would say it's the same thing the lender's going to need. Okay. Right. Except if there is a person in the household who's not on the loan, then we're going to need that information for the person. The lender doesn't need that because they're not qualifying that. Non-borrower, we would. Okay. We're going to need things like income documentation, whether that's pay stubs, verification of employment. If there's other sources of income, Social Security award letters or child support or whatever that might look like.
Okay.
We get tax returns for the last couple of years. So that helps us catch if there's any other sources of income like investments or retirement or whatever it might be. And that way we can do the income eligibility determination holistically based on the household's income and assets. Base statements is another thing that we get. Once again, verifying asset buyer contribution, right? Like, how do we know you got your $5,000? Well, because it's on your bank account and it's sitting right there. So that helps us with that too. So it's really asset and income information. Yeah. And then if there is a question about have you worked here for a year or lived here for a year, we'd be looking at something that documents that, whether it's a lease or something from your employer that shows you've been here.
And a lot of paperwork. I always tell my buyers, you have to reveal your financial soul.
Yeah, so that is true. That's a nice way of putting it. Now, yes,
not outside the typical letter box. So it's very streamline for yet more.
And sometimes we can get those documents from your lender or share them. So if the borrower is comfortable, we'll get a release of information. And then that way we can work back and forth with the lender to try and minimize same docs here, same, so we really try and work as a team with lenders to make sure that everything that we see, they see, etc.
That's an important insight, but you can share the documentation.
As long as the borrower gives us permission, but usually we ask because we're asking for their loan information. So we're going to need it. Yeah.
Absolutely. What are the most common mistakes or misconceptions you see from buyers or even from agents when it comes to this program?
City limits is one thing, right? Like, so Kachina and Mountain Mare and Doty Park have Flagstaff addresses. They don't qualify for this program. So it has to be in city of Flagstaff city limits, the home that the buyer is looking to purchase.
Okay.
So I'd say that's the pool that people are shopping in.
Okay.
I would also say that the whole repayment versus forgiveness piece, it is the thing we say constantly. It's a loan. We have people sign that they understand it's repayable. But just making sure people understand going into it, what their repayment's going to be in the future, because that's important. You need to know the pros of the program and then also the repayment. Like we don't want you getting into something that you're just not aware. Oh, I thought this was a gift.
Yeah.
It is not. It is a loan. It is repaid.
All right.
Yeah.
I know. Thank you for that insight.
Yeah.
Let's zoom out a little bit and look at how CHAP fits into the bigger housing picture of Flagstaff. With our median home prices where they are, what's the sweet spot where CHAP makes the biggest impact?
So I would say it really depends on where the borrower is on that income range, right? So somebody's at $150,000. You got a little bit of buying power there, which is great, but we don't just serve folks at that high. So folks might come in at 100,000 or 80,000. So it's all dependent on really the income of the household, which then is going to impact what you can qualify for in a mortgage. So, we see folks who can find condos or manufactured homes that are a little bit lower on the price range, townhomes, et cetera. We can loan on all of those and single family homes too. Price range also is so dependent on what the interest rate is at the element as well. So right now it's a little higher. If it goes down, then buying power increases. So I don't know that I want to stick a number out there because it's so dependent on who we're serving and those conditions that we can't control.
Well, I think you brought up a good point of just pointing out the different types of housing. It's beyond single family, condos, manufactured. That's great. Thank you.
Yeah, and I will say though that it needs to be home ownership, not chattel. So you have the land has to convey, right? So you can't buy in a park where you have space rent, but as long as the land is coming with the house permanently affixed, so manufactured is fine. Condo is fine. That doesn't have land. So, but anyway, condo's fine.
Yeah.
It's just those ones that are more vehicle, and then they're going to be chattel loans with a space rent. Those don't count for this program.
Yeah. How many households do you anticipate this bond program helping?
Yeah, so I'm excited to say it'll be over 100 and the first, $7 million investment. So we anticipate in the first year serving between 20 and 30 households, which would be great. And then continuing to work in partnership with the city of Flagstaff for multi-years on our contract. And then dependent on how fast we spend the money and how much money comes back in on repayment, then funds should be available in the future.
That's a great perspective. It really shows the scale and impact of CHAP and how it impacts their community. From your perspective, how does CHAP strengthen not just individual buyers, but long-term housing stability in Flagstaff?
The amazing thing about our organization and its historic partnership with the city of Flagstaff is this CHAP program, right? So we've helped buyers since 1999 open the door to home ownership with direct financial assistance. Right now, we're at 482 households that have been financially benefited through down payment assistance programs, CHAP, WISH, programs, not all CHAP, but 482 families. I will tell you in Flagstaff, as I'm sure you know, it's like 1 degree of separation. So I see people's names on the list, right? And I don't always get to meet everybody, but amazingly enough, like you'll be at a PTA event or at your children's sporting event or something, and like names, I'm like, wait a second, like I don't say it out loud because, but I'm like, I know your name because I know you bought a house. And so it's been a wonderful experience over the last 2 decades to get to see not just, yay, you bought a house and we're super excited about that, but 5 years, 10 years, 15 years later, maybe you moved from this employer to this employer, maybe you have kids now, maybe whatever has changed in your life. A lot of times people still own that darn house that they bought with down payment assistance. And so it makes such a difference. Homeownership does for families to put down roots, build stability, start to build equity or investment. A home is often a family's largest asset. And so to help folks be able to stay in Flagstaff, to have stable housing, like your mortgage payment isn't going up if it's adjusting, but in a fixed rate mortgage, right? Like it's not going up like rents are. And so that gives you the stability to really be invested in our community, to coach sports, to be, run for office, to do whatever it is you want to do because you have stable housing. And it's such a game changer for so many families that it is amazing to see that impact over time. So that's truly the gift of CHAP, I think, is that, yes, we get to help individual people, and that's amazing. But when you see that broad impact overall, like teachers can stay here and keep educating children year after year after year because they have stable housing, or police officers can stay in our community because they were able to purchase a first home through the city's employer assisted housing program. Like those benefits ripple and make our community livable and amazing for all of us, not just for the richest of us. And so I'm excited to see the impact of this new CHAP program because I know it will be as amazing as the old one.
I love that. It really frames this is not just about buying a house, but about strengthening our community and the fabric of it.
It is.
So to wrap up, let's focus on what realtors listening today should take away. Okay. If realtors remember just one thing about CHAP after today, what should it be?
That it exists, right? So we are talking to buyers and you're going to ask, income or price range or all that kind of stuff. If you think they might qualify, we're not asking you to decide, just send them our way. So that way we can talk to potential buyers, screen them for eligibility. And then that way it's another tool in their toolbox coming to you when they start shopping for their home. The best way to start is at our website. And so it's housingnaz.org. There's programs, pre-purchase drop down, and that's where we have an information sheet. It's front and back, but it gives all the down and dirty nitty-gritty stuff that we've talked about, right? So if you're like, I can't remember if it was 150% AMI or $5,000 to get 50,000, like if you don't need to be the program expert, literally there's a flyer for that.
Okay.
Which is great. The other thing is that's where the first step happens. So anybody interested in the program needs to complete an application. You already said we like paperwork. You're not wrong. We like paperwork. So the first step is paperwork. So we gather information on the client, how to contact them, what does their income look like? Yeah, it's never 100% accurate, but like the basics, household size, all that kind of stuff. And then that starts the process for a one-on-one housing counseling session. I should say also that Housing Solutions is a HUD-approved housing counseling agency. So we combine the eligibility and the loan administration, like we're going to do the title docs and work with the city on funding, but we're also housing counselors. And so we help people understand the home purchase process. Sometimes people come to us who are not ready to buy yet. And so that's another great resource for realtors. If you're talking to somebody who's like, hey, I want to buy, and they disclose that they have poor credit or they have no savings or they're in a lease for another 11 months, like they're not shopping today. So what can they do? They can start working with a housing counselor to start preparing for homeownership. And so we can talk to them about their debt and their credit. We can pull a tri-merge credit report with scores. We can talk to folks about debt, right? So one of the things we do see sometimes is that the amount of debt a household is carrying could impact what's left over for a mortgage. So sometimes the counseling includes reducing credit card debt or paying off loans, or, how does that current debt impact my buying power? And so that's a counseling conversation. And so we can do all of that work up front with clients and then we can administer the down payment assistance. So it's kind of, that housing counseling piece is critical, and a lot of folks don't come to us for it. They come to us for the money, but then they say after purchase, like, I learned a lot. So that's what we're there for, is to try and give just that broad overview of the process, and then to dial in on your specific barriers and opportunities so that you make informed housing choices. And that's our goal as a housing counseling agency.
That is so true. So many times we get buyers who want to buy it, but their financial house isn't quite in order yet.
Yep.
So now we can send it to you.
And then yeah, that's exactly what we do.
All right. Well, that was it for questions. Thank you. Thank you for being here. I appreciate it. And this is so helpful for a membership.
Well, thank you. And we look forward to working with your membership and their buyers and their sellers, who knows, to help folks get into homeownership. It's great.
Absolutely. Well, thanks again. A huge thank you to Devonna for being here today and sharing her expertise with us. This has been such an important conversation. To our NAAR members, if you're working with buyers in Flagstaff, especially first-time buyers, CHAP is a tool that could help make homeownership possible when it might otherwise feel out of reach. For more information, you and your clients can visit housingnaz.org/pre-purchase or contact Housing Solutions of Northern Arizona directly at 928-214-7456. Remember, our role as realtors isn't just to close transactions. It's to empower our clients with the resources and knowledge that helps them achieve their goals. Programs like CHAP are a part of that bigger picture. Thanks again, Devonna, and thank you to our listeners for tuning in. Until next time, I'm Michelle Linton, president of NAAR, and this is Beyond the Sale.